Greetings and good day. I hope you're doing great. I'm here with the daily Brent oil analysis for March 16th. We saw Brent oil prices last week after opening with over a 15% gain and hitting a 3-year high, eventually pull back and close down by more than 3.5%. In previous analyses,
learn and enter the world of binary option with us. Binary option indicators, powerful strategies, learn, trade, win. Level up your trading.
we attributed this drop to the start of oil reserve releases by various countries, and following that, we saw prices open this week with a downward gap of over 1%. And now today, after financial markets opened, the initial reaction saw oil prices rise to the $103 range. Then the price retreated from that level and is currently trading around $99. This week, we expect heavy volatility in Brent oil prices because last week's US strike on Karg Island, a major Iranian oil export hub, has heightened concerns over energy supply disruptions in the Middle East. Under these conditions, we expect to see further tensions and simultaneous price fluctuations as the week progresses. But a key reason for today's oil price drop was the US allowing Iranian tankers to pass through the Strait of Hormuz to prevent global supply disruptions. This was stated by the US Treasury Secretary, and 2 Indian LPG tankers successfully passed through the Strait of Hormuz. The US President is still in talks with European allies and regional countries to keep the Strait of Hormuz open. This is considered the largest disruption in the history of the Strait of Hormuz, with its closure cutting off 1/5 of the world's oil supply. In this situation, the US Treasury Secretary has predicted that oil prices will likely be well below $80 in the coming months. Meanwhile, other analysts warn that markets have underestimated the risk of a prolonged Middle East war, and since we see no signs of it ending yet, we can expect oil prices to remain highly volatile for the rest of the week. We are looking at the 1-hour time frame. For the short term, above the current level, we have the 1-hour BPR zone, which is at the $107.75 price range. Also, as key levels below the price, we have the daily opening gap area that formed last week. This area is at the $92.17 price range, where the price could react upon reaching these levels. Given the ongoing war conditions, oil sensitivity, and the news, I still don't recommend entering trades on this asset. And until we see conditions improve in the Persian Gulf crisis, we can't expect a significant drop in oil prices. Wishing you success and high profits.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.